Hello, welcome to Commercial Law Group. This video pertains to the Paycheck Protection Program loans that were authorized by the CARES Act, which was made a law on March 27, 2020. The information here that I'm giving you comes from actual review of that law, and also information by the SBA that was widely distributed, and then also further from information obtained by the SBA administrator for Division 7, which was given on a conference call with the Missouri Bankers Association members, of which I am one, on April 1st, 2020. So you have compliance information in here, practical information in here, and some other general information. But those are the sources. If you have any questions, leave them below, or probably better yet, send me an email and to the law. This is just general information. The loans can be applied for beginning April 3, 2020. It is not limited to SBA approved lenders. If you are a lender who used to have a relationship with the SBA, you can contact them and have that reactivated. If you want to participate in this and you are a financial institution or credit union, or actually third parties can participate, reach out to your district office and get the necessary documentation. I think they told us it was 1 or 2 pages, and you will be included on the list and you can make these loans. The loans are going to be funded from your sources, and then these to you on a schedule that I will give you in a minute. There is no fee that you can charge to the borrowers. The only fees that the borrowers can be required to pay is someone who is helping them complete the application. The application form is on the website for the Department of the Treasury. I'll put the link in this video. I'll put the link below in the description to this video, but it's at https://home.treasury.gov. There's a red banner across that page. You click on it for the Payroll Protection Program, and then there is a drop down. There's information for lenders, and then there is the application document. It's 2 pages. They anticipate that the lender will receive the documentation that the lender requests from the applicant to determine the extent of the payroll costs, and the multiplier, which is 2.5 for the maximum loan amount. The loan amount is gauged on payroll. The payroll costs that can be included is quite extensive. So these are the payroll items that can be included: salary, wages or similar compensation, cash, tips or equivalent, vacation, parental, family or sick leave payments, separation, severance or dismissal allowances, group health care benefits including health insurance premiums, retirement benefits, state and local taxes assessed on employee compensation, not federal taxes, or Social Security or Medicare, compensation or income to a sole proprietor or individual contractor. They are also eligible, in addition to corporations, LLCs, partnerships, etc. The individual compensation is limited at $100,000, so they cannot include compensation beyond that amount for any individual person. And that threshold also comes into play in connection with the request for forgiveness. The applicants can request deferment, and deferment, the statute doesn't provide for any real rule on what that qualifications has to be. Every borrower is presumed to be qualified as far as need, and so the deferment, if it's requested, however you decide to have that documented by the applicant, the request for deferment is not included on the loan application, so you need to provide for that, and the deferment granted will be at least 6 months and not more than 1 year. These loans are to be set up for a 2-year initial maturity at a 0.5% interest rate. On the call today, they said the Federal Home Loan Bank is prepared to make funds available for that purpose. This is not to be included against your legal lending limit. So the application comes in, that is what is submitted to the SBA. There are certifications on that application, and the SBA wants you to go over those certifications. There's a section of 6 questions. There's 4 questions, and then 2 other separate questions, and then a final one. So those 7 questions, they want you to verify yes or no that that was completed, and then there are 7 additional places for the applicant to initial, and those are to be initialed by everyone who owns at least 20% of the business. And then those disclosures as far as who those people are is to be included. They need to make sure they put on the application the form of the company, so if it's a corporation or LLC, or that needs to be designated on there's not a separate place for that, but that should be covered in the legal name. These loans, when you submit them to the SBA, are going to be keyed under the tax identification number, whether the EIN or the Social Security number. They want to make sure that there are not multiple loans for the same company on the same location. They did give us guidance today that the 500 employee limit is per location if they have multiple locations. For franchisees, they can do all of their franchises together if it meets the parameters of the 500 employee limit, or they can separate it and do them separately by location. Key to all this is that the business had to have been in existence on February 15 of 2020. It is your discretion initially if the business had closed before that date, but it had been in operation and closed because of the current situation. The SBA does not have clear guidelines on whether that will or will not be allowed. They recommended go ahead and submit it. There are exclusions for certain types of businesses. Marijuana businesses are not included. Live sex businesses are not included. Members of Congress are not included. And then there are other certain qualifications. If you can water it, if you can feed it, exclusion for agricultural businesses still applies. They want, as you're going through to look at these applications, they want you to prioritize these businesses first. Small, very small business concerns, entities in underserved and rural markets. Veteran businesses or veteran-owned businesses, or those that serve veterans, and military communities. Small business concerns owned and controlled by socially and economically disadvantaged, women business entities, and businesses opened less than 2 years. The underwriting is pretty much non-existent. The verification is the business, was the business in existence on February 15? Do they have the documentation to support that there was payroll? Do they disclose properly the name, address, telephone number, and the owners? And do they make the necessary certifications? No collateral. And there's no recourse by the SBA back to the borrower either, unless the proceeds were used for some other purpose, and there is no recourse back to the lenders from the SBA when the lender in good faith relies upon the information from the borrower. In connection with these applications, if your borrower has a 7A loan already, they can ask for deferral of that under your normal rules for 6 months at your discretion. If you want to ask for longer period, then contact the SBA for up to a year. Those rules have not been suspended. If they received an emergency funding from January 31st through April 3rd under the other emergency opportunities that are out now, and that was for salaries, then they are ineligible under this. If that emergency relief or other loan was not for salaries, it can be refinanced and included in this new loan. The lenders will be in charge of determining the loan amount, and that is based upon the payroll information that I read off to you and the documentation to support it. That loan amount will be those costs times 2.5 plus any loan that they had from January to April that is going to be included, and then that will be their loan amount. That amount, the lesser of that amount, or $10 million, which is the limit. If you grant deferment on these new loans, that includes both principal and interest. If during the covered period, and the covered period is 8 weeks from the date each of these loans is made, and that is what is looked at for the forgiveness model, and that is also looked at for this next part. During the covered period, if you sell these loans on the secondary market and your investor, or you offer them for sale and an investor declines to approve a deferral that you're making in connection with it, then you are to contact the SBA administrator. They will repurchase that loan. Then you are to contact the SBA administrator, advise them of what the investor said, and they will purchase the loan. They're doing that because they want deferrals to be available, and the statute basically says if they're requested, the deferral is granted. From the submission to the SBA administrator on your investor's statement and the deferral situation, the SBA will act within 20 days to give further information on the deferment process. These covered loans made under this PPP program are eligible to be sold on the secondary market without fee and without guarantee by your institution. Covered loans, which are the loans made under this program, are assigned a risk weight of 0. That's for purposes of risk-based capital requirements. Then, this is right from the statute, and an insured depository institution or an insured credit union that modifies a covered loan in relation to COVID-19 difficulties. So you make the loan and the borrower comes back and has further requests. Maybe this whole situation is extended. Maybe there's something particular to them, and you are going to modify this loan after it is made. Then if that occurs on or after March 13 of 2020, you're not required to comply with FASB Accounting Standards Codification Subtopic 310-40 for purposes of FDIC compliance until the appropriate federal banking agency or the National Credit Union Administrative Board so requires. And that pertains to receivables and troubled debt restructures by creditors. The SBA will pay you a fee at the rate based upon the balance of the loan outstanding at the time of disbursement. So the principal amount of the loan. If the loan amount is $2 million or up to the maximum of $10 million, you will be paid 1%. If the loan is between $350,000 to $2 million, you will receive 3%. And if the loan is $350,000 or less, you will receive 5% as a fee. These fees are due to be paid to you not later than 5 days after you disperse the loan. Any agent that you use in connection with these loans may not receive any fees beyond the standard SBA guidelines. And in today's call, it was stated that those fees will be borne by the lender out of the fees that the SBA pays. So they didn't really think that third parties would be required unless, like in general, this information that I'm giving to you, unless there's something overall for all of them, but on an individual per loan basis, they didn't see, based upon how streamlined this is, that that really would be necessary. In connection with these loans, there were other modifications made to the 7A program that, just in general for your information and for making other types of loans, these will sunset at the end of this year. So 12/31/2020 they expire. For 7A loans, the authorized amount was increased to $349 billion. The business loans program amount commitments amount do not apply. 7A 31D express loans, the maximum amount has been replaced from $350,000 to it's been increased to $1 million, and that sunsets on January 1, 2021. So that can be done on the last day of the year. Amounts of the purchase guarantee portion of any of these covered loans that were forgiven or treated are treated according to the standard 7A procedures. Moving on to the forgiveness procedure, and not later than 15 days after the date on which the administrator receives the report of your expected forgiveness amount. So what happens is the borrower submits the request for forgiveness to the lender. The lender has 60 days to turn around back to the borrower and tell them yes or no and what part will be forgiven. From the time that the request for forgiveness is given, you then have 15 days. After you receive that request for forgiveness and you look at the materials that the borrower gave you and you determine what you think the amount that you're going to agree to forgive is, then you send your information to the SBA within 15 days of them receiving your information on your projected or estimated amount that you think will be forgiven. They are to purchase that amount from you. Any amount forgiven to the individual borrowers is not to be reported as forgiveness of debt subject to qualifying them, which would qualify as income attributed to the borrower. Instead, it is going to be considered canceled debt and not reported. For example, on your 1099 miscellaneous forms. Lenders are exempt from enforcement or penalties for relying upon the documentation submitted to you by the borrowers or the applicants. The forgiven amount cannot exceed the principal amount. So if there is a forgiveness of the entire loan, the borrower is going to have the 0.5% interest payment due to make to you. After the determination is made on how much will be forgiven, the maximum, then the loan is to be amortized over 10 years, and the interest rate is assigned as you determine, but not greater than 4%. For submission of these covered loans, the SBA is going to go by the application that is submitted by the lender, and they are not specifying any particular type of loan documents. The note is they presume that you would prepare the initial note to be amortized over the maximum period of 2 years at the 0.5% interest rate. However, they have not come out with any guidance on any particular documentation. And as this opportunity to extend these loans is beyond the SBA certified lenders and out to third parties, they don't have any specifics on that right now, and they're not asking for copies of those documents. There was an indication that those in the Farm Credit System and for ag business loans can also extend these loans. That's not in the official statute, but that was mentioned on today's call. The loans are 100% guaranteed by the SBA regardless of their size. The application period will end June 30, 2020. So this is a very short window for these loans to be applied and approved and processed and funded. And then the 8-week period begins separately for each loan from the date it is dispersed. And it's that 8-week period and what money is spent during that 8-week period that comes into play for the forgiveness portion. The SBA wants 75% of those proceeds to go to the various payroll costs that I listed out at the beginning of the video. If there is some reason that some other expenses were made, there is discretion for you as the lender to work with your borrower as far as why those other items were paid and give the borrower the opportunity to defend that action. And so there is some de minimis authority that you have in some of these parameters. Loans can be given to the NAICS Code 72 businesses, which includes hotels, restaurants, all types of mobile food vendors. I have the whole list. If you don't have it available, I can send it to you by email. Churches are eligible, banks are eligible, all types of 501c3 nonprofits are eligible, and any other business that meets the other requirements that was in business on February 15, 2020. There was a specific request about banks and whether if they are going to apply for this, should they do this on their own or should they apply through another bank. Arm's length. The recommendation was to not self-loan in these situations. The next question was, what about loans from a bank to any of its directors? And the administrator stated that if that director is an owner of a business that qualifies, then and that business on its own otherwise would qualify, then they do not see any issue or any problem with the bank for whom the person is a director and owner of this business obtaining a loan from that institution. The 7A Office of Capital Access is beginning conference calls this week, and there will be further information available, and they will give guidance as questions come up. If you have separate questions for the administrator, contact your district, and they have a skeleton crew there, but they are answering phone calls and they are accepting emails. If an applicant comes into you and seeks one of these covered loans, however, their business was not open on February 15 because they had to close it before, they can still submit the application, and it is up to your discretion as far as the information that they provide to you, as far as the business closure and what was going on, and whether or not you would grant eligibility. Because the IRS is closed during this quarantine, they are not issuing transcripts for taxes, so the borrowers need to bring into you their tax information, and it is presumed that 2018 would suffice, together with the payroll information for 2019 for existing businesses and the payroll information for the brand new businesses for the months of January and February of 2019. There is no set time frame within the Department of the Treasury to get the money out. They have committed to doing this as quickly as possible, and so there should not be a problem in getting the fees over to the banks and getting you the money once the forgiveness process starts. Basically, the SBA has abandoned all of the previously used policies for purposes of this short period defined loan program. The SBA and everyone understands that not all businesses are able to reopen, and so reopening the business is not a requirement. It works for businesses that are trying to maintain their existence through the period between now and June 30th, with the idea that hopefully the restrictions will be lifted, the employees can be paid, the rents can be paid, the mortgages can be paid, the lights can be kept on, people can be keep food on their table, and then by the time we get to June 30, then things can get back to normal without harsher penalties on small business. They made it clear nothing prevents you from making a business loan to an ag business. However, those would not be included. The feed and water would not be included in this guarantee program. If the business does not have a payroll history, then that is left to the discretion of the lender as to what information you will accept to determine the eligible loan amount. The credit elsewhere tests that are traditionally used are all waived, and they do not apply here. Unless the OCA makes any new rules, there are not any reports that are required to be made other than the submission of the applications to the SBA for, booking the loan, and then the other follow-up communication that I've already mentioned regarding the deferral and the forgiveness. They do recommend that you keep track of these for your own records to make sure your fees are being collected and just otherwise to track them. At this point, there is not a specific line item or other report that is going to be required. Because the as-of date for purposes of the loan amount is February 15, 2020, and because some applicants have let go people, or they furloughed, or they just had to close, they want the business owner to be cognizant of that number that they put in for the number of employees or the head count as of February 15. They have full-time equivalent employee, but they're using it more as a head count. Full, part-time, temporary, occasional, seasonal. And they want the business to work with the lender on what that number should be so that they understand it, because that is a number that compares to what the number will be at the end of the covered period, which is their 8 weeks after they get the loan. And deviations from those numbers, either they stay the same or go up, is beneficial. If they go down, that impacts the forgiveness portion, and so that is relevant. If I have another video on another channel, I can send a link to you if you want the information on how that forgiveness is computed. And so, to be clear, there are no call reports or special general ledger notations that are required in connection with these loans. The maximum amount for the $100,000 to be included in the annual salary to be included in the payroll amount came up as another question, and they said, what about the owner of the business? Does the owner of the business get to participate in being paid and in their payroll being included in the payroll figures for purposes of determining the loan amount and then being paid through these loan proceeds? And the answer was absolutely yes, so long as the owner is active in the day-to-day business of it and isn't otherwise entitled by the company to compensation for that work. There is no credit report required. And so long as some operations of the business are in effect, there's no issue with them being qualified. Every applicant that is otherwise qualified is presumed to have the need.